Welcome to the Pick Your Lane podcast with your hosts, Chad Robinson and Peter Lount, featuring successful entrepreneurs and investors who have created financial and time freedom through their passive income and picked their lane for an investment or business in pursuit of bringing them a better future. Now let's get started.
All right, welcome back to the Cashflow Canucks Passive Income podcast. I'm Peter Lount. I'm here with my co-host, Chad Robinson. Today we have Jose Jafferji. Jose is a seasoned and award-winning real estate investor, entrepreneur, and founder of Savvy Real Estate Group. He started investing in real estate in his early 20s and grew his portfolio to over $90 million in assets under management with 150 units in Ontario and partnership interest in 450 units in Southeast US. Jose used multiple strategies, including duplex conversions, flipping, development, and now primarily value-add apartment buildings through effective management and major CapEx projects over $1 million a year in renovations. He has over 10 years of financial and investment experience and over 15 years of construction and project management experience. Jose, welcome.
No, thank you for having me. I appreciate it.
Great to meet you.
Yeah, so maybe we'll just start. I've kind of taken the folks through a bit of your bio, but maybe you can expand on that a bit in terms of your journey. Tell us how you got to this point, and then we'll maybe dive into that a bit more. And you yourself and Chad and myself were talking about this. Like, we really want to dive into the passive income side of things. So,
yes.
But yeah, go start with your story, and we'll go from there.
Yeah, absolutely. So like you mentioned, I started investing in my early 20s because I wanted to leave my job. That was my main goal. I was kind of tired of the 9 to 5. I worked really hard at I had an engineering degree, and I worked for a large engineering and construction company. But before that, I used to work for a smaller, medium-sized business. And, I kind of proved to myself that I'm going to work hard and get the raises and get the higher income that way. But obviously things didn't work out. And then I left my job and started working for this engineering and construction company. And that's when I realized that, there's got to be a better way to make more money, live, control my own schedule and create passive income. And at first I was actually focused very much on, I didn't know too much about real estate. So I got my life insurance license and mutual fund license. And that's what I was, a salesman for. That's all I knew, the financial markets. And, that's when the 2007 and 8 crash happened. And I'm like, this is not working out. So I got to look for an alternative way to a different investment strategy. And that's when I found real estate. That's pretty much in a nutshell how I got started. And as you mentioned, I employed many different strategies, from duplex conversions, and we got into a lot of flipping, and I just completed a small development project. And now we kind of, over the last 2 years or so, we transitioned more into larger multifamily syndication projects in the US.
And so maybe just walk through that, maybe how you made that transition. What was the kind of breaking point for you to decide? I know you said like, maybe just I know you kind of summarized it, but was there a crucial point in which you made that decision?
Yes, absolutely. I was, so my first job, I talked to my boss after I was there. I worked for about, a year with him. And then I said, during the interview, I told him like, hey, I'm looking to get a raise. I'm going to prove to yourself, to your company, and that I'm going to do a great job. I'm going to work hard, long hours. And, at the end of the day, he told me that you come back and then, I'll give you a raise. And that obviously didn't happen. He made up some excuse. So at that point is when I thought to myself, I cannot let somebody else control my destiny in terms of how much I make, in terms of my schedule. And that's when I started looking at, obviously nothing happens overnight, but, I started to explore down the path of what can I possibly do? What kind of businesses can I go into or investments can I make that will allow me to break free from this, 9 to 5 world, right? And that's when I discovered soon after real estate was my path to getting to that.
That's amazing. And you're saying you started with duplex flips and conversions. I mean, that's a pretty common place to start, right? Do some renovations, and it's attainable. And where was your next step? What did you find was your next? You transitioned from duplexes into what?
Yeah. So from as the I first started with single family homes as that was the easiest to get into, but I always looked for something that was kind of a value add strategy, right? So I never bought anything that was like turnkey, everything renovated. There was always a value add component to everything we did, and even until up now, right? There has to be something that we can do to force the value as quickly as possible. So that way we can use that BRRRR method, which is buy, renovate, refinance, and repeat. We can get the cash out, and I can continue to grow my portfolio. Because in the beginning, I wasn't using a lot of joint venture money. I was kind of self-capitalizing, kind of borrowing through my friends and family a little bit. So that's how we catapulted our portfolio. But yeah, after duplex conversions, we always wanted to get kind of ahead of the curve. Because before a lot of people started doing the duplex conversions, we kind of saw that, this is the trend. What's next, right? And then before people got into multifamily, we were buying apartment buildings here a few years ago, and at that point, much better price. So we've always wanted to make sure that we got in front of whatever the next curve is. And before, majority of the people realize that, hey, duplex conversion is getting too expensive. There's not enough spread. We want to, so whether it's a different market we choose, like we weren't doing anything in Toronto, just for the reason that it was too expensive. But way before, like, Hamilton was sexy, or on the East End, Oshawa was sexy, we were already investing in those markets.
Nice.
So our kind of our uniqueness was that we always wanted to be in a market or in a strategy that was not too crowded.
You mentioned there the transition, so self-capitalizing and then moving to joint ventures. We talked previously about, because obviously Chad is a specialist in private lending. So what was that transition like, going to joint ventures and then getting private money to be able to do that? What kind of obstacles or opposition or did you go through to overcome that hurdle to jump into that arena?
Yeah, when we first started starting kind of dabbling into the joint ventures, we did a couple of deals with family members. That was the easiest to get credibility with. The challenging part was that we didn't like the aspect of, like, at the dinner table discussing what's going on with the property, especially when things are not going right or not according to plan. So it's kind of awkward with having family involved. But so we weren't too fond of that idea of having too many joint venture partners. We wanted to kind of focus on self-capitalizing as much as possible by implementing this BRRRR strategy, right? So as quickly as possible, we want to improve the value of the property. And and once that started to kind of snowball, we had several projects going on at once to kind of snowball that. But definitely, joint ventures, I would say, our forte. We preferred using private funds, like, and rather than giving away equity stake, especially later on in our career.
And was that through the private funds? You're getting it through just through networking, getting through mortgage?
Through networking, yes, through networking, and sometimes it was just through like mortgage brokers as well. We got some secondary financing. And that's when kind of we got into larger apartment buildings, especially with the large capex budget. We will be renovating, sometimes 20 units in a year. That's when we utilize the funds from the capital, private capital, like whether it be mortgage brokers or second mortgages, and obviously we want to make sure that we're not over leveraged at the same time. But that's we prefer that model over the equity model, just because, especially in Ontario, what it's in order for you to implement your business plan, it's not as predictable because especially with larger apartments, you're not sure when you're gonna get the vacancy, the turnover to enable to increase the rents.
That's neat. What did you find that to help our listeners? There's a lot of people that are going on your journey, and they're getting stuck at these plateaus, right? So in my career, I've seen many people. They buy 1, 2, 3, 4, they hit a plateau, and then I've seen they hit a plateau of about 10 properties. And so, did you find the similar thing? Did you hit those plateaus as you were growing?
Yeah, I would say, in the residential space, sooner or later, everybody hits that plateau, right?
Mm-hmm.
And so we always made sure that we worked with the right mortgage or broker that was kind of investor focused. So they would kind of go through a game plan of which lenders to go with first before you go to the secondary lenders and the alternative lenders. So we made sure we were working with the right team. And then, like you mentioned, everyone gets that ceiling, and that's when we started looking into apartment building, getting commercial financing.
Yeah.
And I would just say, that transition, we kind of regret not doing it sooner, because we were always trapped in thinking like, okay, we're going to keep doing these duplex conversions, but then the cap kind of forced us to look at larger apartment complexes. But we were also doing having, for example, partners that would qualify for the financing for some of our deals as well on the duplex conversions.
Yeah, if you have the equity, right? A lot of people are shocked that it's actually easier to get qualified for commercial than it is residential, as long as you have the equity available in the projects and the cash flow, of course. I know the banks want to know that the cash flow.
Yeah, yep. It's less scrutiny in terms of your personal assets. So yeah, with commercial, as long as, like you said, you have the equity, the funding is pretty smooth.
Yeah, that's amazing. What was your, I guess, the thing I often hear from people is, okay, well, how do you find these joint venture partners, and how do you find these people to capitalize your projects? And I know you said you started with family; it was a little bit uncomfortable. It's a very common first step. And then, how did you go from there? Like, that's part of the secret sauce, right? Is like everybody hears about other people's money, and then they don't know what's the first step. Did you get coaches? Did you read books? What was your journey?
Absolutely. I'm a strong believer in coaching. Along the way, I attend a lot of conferences now, more so in the US. But just surrounding yourself with other like-minded individuals, attending conferences, your mind starts to expand into thinking bigger and what's out there, what kind of strategies are working in the current environment. So I'm a big believer in coaching and networking within the real estate community and business community in general. So I frequently attend, probably every quarter or so. I fly down to the US now and attend the conferences, and I'm I also do some part of some masterminds as well. That just really, I'm a big believer to accelerate your growth with coaching. And in terms of books, I mean, I'm a big reader as well. Maybe not so much a reader. I'm more of an Audible guy, so I always get audio versions on Audible. But yeah, definitely, there's great books out there on so many different niches. Sometimes I'm reading leadership books or building teams. Sometimes it's about raising capital. And just business in general.
That's great. And this is more just I guess, curiosity for us and our listeners. And I agree with you. Knowledge is the most important thing to help all of our businesses. And grinding in our day-to-day businesses is one thing, but investing in yourself gets you to the next level, right?
Yeah.
So, is there kind of and it sounds like it's been consistent for you, always investing in your education. What do you kind of just guess, per month or per week that you spend on learning, like conferences and mentorship, books?
Yeah, I would say on a yearly basis, with mentorships, with books, everything combined, like probably about 30,000 a year.
Oh, wow.
Yeah.
So, and that's a lot of time per week that you're putting in.
Yeah.
That's
absolutely
amazing.
And then once you have that financial commitment, right, like you're going to take that seriously.
Mm-hmm.
And you cut, because you got a lot of vested money at stake, and you want to make sure that you are utilizing what you've paid for.
Yeah.
Peter, have you found that people investing in their education are the ones that exceed the most?
Yeah, I think to Jose's point, I think also it's creating a bit of a network of people who are in the same mindset and, maybe have done things before and show you what is possible, right? That you weren't even thinking of. I want to ask you a question about your team. I know you said so your team is yourself and your wife, correct?
Yeah, so my wife and I are the managing partners, and then we have staff underneath that help us with bookkeeping, project coordination. We have some in-house contractors, like construction guys as well, because we do like high volume renovations. So yeah, that's kind of the nutshell, what our team consists of.
The U.S. part of things, like how did that happen? Why are you there? And
good question about the U.S. So 2 years ago, when we were still actively buying apartment buildings here in southwestern Ontario, we were just, nothing made sense. The prices were overinflated. People were buying very speculatively, and that was actually everywhere, right, in the residential sector as well.
Yeah.
And so because I had invested in the U.S. 10 years prior to that, I'm like, you know what, let me look at the U.S. market again. It's always uncomfortable to invest across the border, but as long as you have the right team in place, you have you're talking to the cross-border accountants and lawyers, you can get yourself set up. And main reason was that the southeastern United States, especially, is landlord-friendly, so you don't have issues when it comes to tenants, rent control. After 12 months, you as the landlord are able to choose whether you're going to increase their rates. There's no cap. And it kind of creates a more balanced market. I think it's a more of a fair system. And then ultimately the price point is also more attractive. So you're looking at about almost half the price for the same rent that you would get. So,
wow.
All of that, considering that I started looking at, the US market more seriously, and then started going to networking events, even like virtual ones, especially 2 years ago. And that's when I connected with a lot of like-minded individuals and kind of catapulting my growth in that sector, in that market.
So for people, and I appreciate, that's amazing story, Jose. I hear a lot of clients looking at different countries in the States and to invest in real estate. And you're right, there's a lot of things aren't cash flowing in Canada anymore. It's gotten a little bit better, but they're still upside down in a lot of the numbers. The biggest concern I see from a lot of people is, how do you choose people in a foreign country and make sure that there's a lot of people that don't have your best interest in mind. And it's hard to weed them out when you can meet them face to face, but when you're not meeting them face to face, what was your first step in experience with putting your team together in the South?
Yeah, no, great question. And again, that goes back to, joining masterminds, because there's that extra trust factor. Because if you're part of a mastermind, everyone's got the same goals. and within that mastermind, if you're going to do business with somebody that's let's say, boots on the ground, like that, they live in a specific part of the states that you want to invest in, they could be kind of your eyes and ears when you're not there all the time, right?
Right.
So, and that trust factor comes because you're part of the same group. Everybody wants to maintain a good reputation. So it's just like being part of a club. You're gonna have that trust factor because you're both part of the same club.
Oh, that's cool. That's great. Great feedback. And was there a place that you found these masterminds? I guess maybe I'll ask the question a different way. For somebody that is thinking of buying real estate in the States, is there more local ones? Like they're going to look in Florida, they're going to look in Orlando mastermind groups, or is it more just buying in the States as a whole? Like where should somebody go to get this information?
I would say join national groups, right? Those ones that if it's a specific place like Florida, like as you mentioned, then you're looking at more the meetups. But these masterminds are nationwide. They usually have several events a year, training, education, networking.
Nice.
That really allows you to kind of be well connected within the community, and everyone's helping each other out because you all want to grow together, right?
Mm-hmm.
And these larger deals, syndication deals, are kind of a team sport, right?
Yeah.
So you're gonna have so many different players. Some that are for us, I was one of the lead sponsors, so we are the ones that found the deal. We did the underwriting. We made a lot of broker connections. So I used to fly down and meet brokers, to build a relationship with them, and so they can send you deals. But then we also partner with a lot of capital raisers. Because with a larger deal, it requires a lot of equity. So we had a lot of capital raisers that we would give a equity stake for us to bring in more capital and
Nice.
make the deal come through. And then we have we built out a kind of asset management team as well. But a lot of the things are done virtually. Like pretty much 3 times a week, I have an asset management meeting on Zoom. And with our site staff that are working at the property, as well as our property management company, our construction manager. So we're all on the same page, and we're implementing our business plan.
That next piece, the syndication part, I guess there's a lot of moving parts as part of that, right? Building out, working with lawyers and obviously making connections, contacts, and all that. You talk a bit about that process, and then the next part. I know you said you're raising capital, but then how do you expand out to get other investors? Is it available to anybody if you're running something like that, or how does that work?
Yeah, anybody can. If you don't have to know everything about syndication, right? As long as you are good at certain things, then you can be part of a team that, because like I mentioned, syndication is a team sport. Somebody might be good at just raising capital. Somebody might be good at broker relationships and finding deals and underwriting. So you kind of team up. There might be other people that are good at marketing. Some people are good at the construction aspect. Some people are good at the asset management aspect. So we kind of would all team up together in order for a project to come to life, right? Because these are typically over 100-unit apartment complexes, and so there is a large equity requirement, and it's a 5-year term typically. So we all got to work together to make sure that all of our investors are protected, and we deliver what we had projected for.
The 5-year term, is that what's the plan at the end of 5 years? Is it sell the asset?
Typically we would sell the asset. Usually our plan right now is we would refinance in 3 years, and then we may hold it for another 2 more years. But we're not tied down to that exactly that specific 5-year term. It could be could be 3 years, it could be 5 years, it could be one more 6 maximum. So the general partnership team would decide what's the best course of action to take given the market conditions at that time.
Your investors, it's in the US, or what percentage of them would you say are Canadians that are involved in the projects?
Well, 1/3 were Canadians, and then 2/3 were Americans. Yeah. So we had one partner that was a private equity firm that also invested with us. So that's kind of that's the beauty about the U.S. market being a larger market. You can get equity partners as well. If so we contacted probably about 15 different equity firms, and then one said yes to our deal.
That's all you need.
That's pretty good odds, actually. That's 1 out of 15 is good. And how long have you been doing this? When did you start you said you started in your early 20s. So yeah,
I bought my first property back in 2007.
Wow.
It was my attempt at flipping. Yeah, my first house.
That's pretty amazing. So, in less than 20 years, you've grown quite a portfolio.
Yeah. Yeah, just been persistent at taking action every single day to drive growth.
So I guess to our listeners, what I'm hearing from you is, in a reasonable amount of time. I mean, real estate is kind of get rich slow, but even less than 20 years is still pretty fast for real estate. But I'm hearing you're doing a lot of action, consistent action, a lot of education, and a lot of networking. That's really what I'm hearing has been the key to your growth, and that's a testament to everybody. Those are simple things everybody can do, right? Everybody can learn. There's information is free, a lot of it, and and making that action, that commitment.
Absolutely, anybody can do it. I mean, you obviously it's simple but not easy. You gotta constantly and consistently take action towards your goal, whether you're an active investor or a passive investor. You gotta move that needle every day.
Absolutely. And, everybody we come on podcasts often, right? And we're talking about all of our successes, but, there's some lessons that I'm sure you've had along the way, and you've learned some great things about it that help propel your business forward. Is there anything that you can share to say, hey, here's a pothole that I had, but this is what we learned from it, how we overcame it?
Yeah, no, 100%. I mean, especially with the challenging times we're in right now, definitely you don't want to over leverage yourself, right? Because a lot of people, when the market is hot, they tend to be overconfident on what's going to happen, and they tend to over leverage themselves. So, that was it's a great lesson. And then surround yourself with a team, right? Like we were always in this mindset that, hey, we got to do everything ourselves, right? But that kind of limits your growth, right? There's a quote that says that if you want to go fast, you go by yourself. But if you want to go far, you go with a team.
Right, 100%. Yeah.
And so giving away equity on your deal, it's at first we're like we want to try to do everything ourselves so that we can keep 100% of the profits.
Yeah.
But especially with larger deals, you got to give away in order for you to grow. And
well, the richest man in the world only owns a fraction of his company. So
exactly.
So to expand upon that, the learning and all that. So people who are part of your group, do you expose them to any of that as well? Like people who are in the syndication as well? How do you, I guess, help them along that process as well? Are you interacting with them?
It's a lot of education. It's because most people don't understand what syndication is, right? Not as popular of a term that especially used in Canada. So it was basically it's a we're pooling investors' funds to invest in a larger, more institutional quality asset, right? Which will have professional property management, and typically these larger apartment complexes, they would have staff on site at all times.
Mm-hmm.
So we for our property which was 122 units, for example, we have 2 maintenance staff and 2 office staff. Now, they're not always full time, but some of them are. Especially right now, because we just acquired the property, there's a stabilization period, and so we have to because of you're buying a business, right? So you have staff that you can hire with it. But back to your question in regards to investors, it takes a lot of education to kind of make sure that they're comfortable with not only that this is going to be an illiquid asset or investment for a 5-year term, but also, there's cash flow is not going to be consistent. You're not doing private lending, so got kind of the pros and cons of our type of investment. I'm not sure if that answered your question.
Yeah, I think it's all part of it, right? I think even in Chad's business too, right? A big part of it is education, getting people to understand and get into clarity about, not just the good, but the potential pitfalls of going through it. And if you're in something long term, then you need to be full disclosure, right?
Absolutely. And I mean, for example, just to be totally full upfront, nobody predicted that the rates are going to go up high and this fast, right? So even for our commercial deals, we have what we call a rate cap, which kind of protects us from future rate increases. So it's kind of an insurance against rate hikes. So that's available in the US, but there is still a increase. There's a threshold, right? Only after like 1.5% that kicks in. So we still had to absorb that 1.5% higher rate, and of course, you have your projections, but there's so many curveballs in between, right? You have because of the economy and so on and so forth. There's you're faced with higher delinquencies than you projected, for example. So, or renovations taking longer than expected. So there's going to be all these curveballs that come along, and but at the end of the day, nobody can predict that, right? You try to model that as much as possible, and so that's definitely a lesson learned for us, that we have to be even more conservative moving forward on our projections and our underwriting.
Absolutely. I work on a lot of construction projects for larger developers, and during COVID and last year, many of them saw their costs. Even they had contingencies built in, which is what you're talking about.
Yeah.
The budget increases, like lumber in Canada, went through the roof very quickly. So people's numbers just went upside down overnight on projects that were making a healthy profit are now losing money, and so many people were scrambling on how to fix these kind of situations.
Yeah, I mean it's just the nature of any kind of investment or business, right? You can only project and to what you what makes sense at the time, but there's these major curveballs what we're being faced with now, which I don't think any economist would have predicted that we were going to go up this fast with the rate hikes, right?
Yeah. So I have two final questions from my perspective, and see if Peter has one. Is you talk a lot about coming what's next and trying to be ahead of the curve, and you're in Hamilton before Hamilton was hot, and in Oshawa, and you're in multifamily before. So where are you seeing things going? What's the next the next big on point trend, or that you might see coming?
Yeah, we're as of right now, we're just trying to conserve as much cash as possible, because I think there's going to be more opportunities coming. There's definitely going to be. I can see that there's a lot of people. I can't speak to so more so in the U.S. With the commercial space. Mm-hmm. A lot of people got into this bridge lending, which were 2-3 year terms, and now they have to refinance or sell because their loans are maturing. Mm-hmm. So I think there's going to be some distressed sales coming, and if you have some dry powder available, you're the right place at the right time.
Yeah.
Connected with the right brokers. There might be some good opportunities that you can pick up, heavily discounted deals.
Great advice.
Yeah.
And then you're also running a podcast. What's that about, and how do people find it?
Yeah. So my wife and I run a podcast called the Savvy Real Estate Investor Show. So it's about real estate mindset, just business, and just having great daily habits. So we don't go much into the technical part. We just kind of more into the mindset and what it takes to be a great entrepreneur, and the benefits are for investing in real estate, or either as an active or a passive investor.
That's awesome.
Very good. Well, Jose, we appreciate your time today. And so I think Chad's probably started the first part of it, but if someone wants to know more about what you do and get in contact, what's the best way to do so?
Yeah, you can follow me on Instagram, Jose Jafferji. Our website is savvyrealestate.ca, SAVVY realestate.ca. You can reach us through that as well.
That's great. Well, yeah, I mean, we appreciate you coming on, sharing your story, adding value to it, and wish you all the best and what's coming ahead.
My pleasure. Yeah, I know. Would appreciate the opportunity.
Thanks. Have an amazing day.
Thank you for joining the Pick Your Lane podcast. You can find more episodes on the podcast platform of your choice. Chad and Peter welcome you to visit their site, pickyourlane.com, for access to more content from our guests. There you will find curated interviews, education, and some offerings that will help you pick your lane on the way to financial freedom.